So let's go back to the mortgage. Mortgage rates are currently high, but you can refinance, and there's a lot of opportunity. Now, Trump has also brought up this situation where you're going to be able to port your interest with you. So say you own a house and you want to get another house, you can port that low interest rate with you and maybe get another loan with a 50-year amortization, which is fine because who says that you have to, everyone's starting to cry about it. Oh, it's too long, it's too long.
Yes.
Well, you can pay it off whenever you want. Mm-hmm. It's even better because then you can make payments directly towards your principal. Every mortgage company allows you to make payments directly to your principal. I don't believe in doing that necessarily. If it was me, I would just want to pay an interest-only loan for the rest of my life. Why? Because the interest is deductible. Okay, That's number one. Number two, it allows me to buy an asset that I don't have to have any money in. So when you own real estate, you own property. So think about this with the life insurance. I'm going to put it all together.
I know you will.
I put money into this policy that builds this cash value that's guaranteed. It's not an index universal life or any stuff like that. It's just an old-fashioned. That's all I deal with. I just deal with whole life insurance with high-paying dividends, good companies that are 100 years old, or term insurance, whatever's the best term rate out there to get you the best deal for you. Everybody knows term insurance. It's basically you're renting it. You never get it. It's never going to pay. I mean, less than 3% of all life insurance claims are paid with term insurance. You can Google it. But, whole life, standard, really good carriers, put my money in there, maybe a 10-year plan, be done in 10 years, and have it vested sitting there. And while I'm putting this money in there, every single year building up this money, I'm leveraging against it. I'm borrowing against it to put into real estate, and it pays me interest and dividends on my borrowed funds. So look at these different drops of leverage here.
Yes.
I'm taking money from a place that's paying me interest and dividends on borrowed funds. I'm using that money to go in as a down payment on a house or a commercial property that's going to grow regardless of whether I have a mortgage or not. So to me, I'm getting something without paying for it, which is called leverage. I am leveraging an asset. I'm putting down $25,000 as low as I can on a $250,000 property. That property is going to grow whether there's money in the property or not. So for me, I would want to have the biggest loan I can for the least amount of money and write off all the interest rates as a tax deduction and let that property grow. And even if it breaks even, I have a real estate calculator that I could prove to you that you're making a 12% to 14% rate of return on your money without having any money in it. Okay? So
I mean, this
think
is
about
magic.
those.
Yeah.
No, and it's really like most people that are on the radio, basically they want to, listen, don't get
Sell
me
you
wrong.
something.
I want to sell you something. Trust me, I want you to become a client. But as a fiduciary, I'm going to tell you what's in your best interest. And not everybody's ready for this, okay? It maybe not, but we could start somewhere. We could put somewhere. Why do I use life insurance as a savings spot? Well, I don't care what you say, whether you have family or you don't have family. It's good to have because what will happen is when you retire, you'll be able to do things that you would never think of doing with the other money that you have saved.
Oh,
So let me say that again.
please.
Let me tell Peter I'm on my radio show, so I'm just telling everybody. I'm texting my buddy back right now, telling him I'm on my show.
Listen, we're on the radio. Quit it. Yeah.
Stop calling me. So anyways, real estate is going to grow regardless of whether you have money in the property or not.
That's fascinating.
Real
Yes.
estate's going to have tax benefits. So if it does start paying you revenue or income from it, because if there's additional tax benefits other than writing off the interest on the loan, there's also what's called depreciation. And there are specific companies, and I've never told you this before, but there are specific companies out there that will take a piece of property, commercial or residential, that you rent for investment purposes and do different depreciation schedules. So, for example, cabinets are good. When you depreciate a piece of property, that means that your you're saying that, you know, the walls, the HVAC, the floors, the cabinets, the countertops, they don't last forever.
No.
Eventually, you're going to have to replace some of these. So the IRS says we're going to take a standard depreciation of 27 and a half years on your property, so that your property will be able to give you a tax benefit. So if income comes out of there from you renting it out, we're going to reduce the tax liability because we're going to depreciate this house. We're going to say that the land doesn't depreciate, the house depreciates in value because it's wearing and tearing, and that's what depreciation is. Wear and tear of it, right? So what you do is a lot of times your depreciation will reduce any income taxes on income that comes out. Let's just say you don't have any income, you break even. You're still going to make a return on your investment because of the tax benefits of the depreciation and the write-off of the mortgage interest rate. So there's always money, leverage. Where did I get the money? I saved it in my insurance policy. What happens at the end? I pay back my loans. Now everybody's paid. Everyone's there. My real estate, maybe I refinance it. I get a better deal. Maybe it starts producing income because the rates went down, so now I'm getting maybe $300, $400, $500 a month per property. And at the end of the day, maybe I sell all the properties if I choose to do so. That's the only problem that happens. Why do I have insurance? Well, what happens if I die? I don't have to worry because my properties. This is a question that was asked to me last week too. What happens when I die if I own real estate or if I have an investment account? Well, what happens when you die is you get what's called a step up in basis. What that means is that whatever you paid for it doesn't matter anymore. Your new cost basis of what you pay for it is what you sell it for. So therefore, there are no income taxes when you die on any real estate or any type of investments. So you don't have to worry about that. But what I'm worried about mostly is creating these assets and making them work together to create income in the future. And so, like, if you had a life insurance policy that you had bought years ago and it was all vested and paid for just sitting there, and say it was like $500,000, I don't have to pay for it anymore, it's just sitting there, you're not telling me you wouldn't want that? Why wouldn't you want that? You know, instead of paying for something, I invested the difference and I made better money elsewhere, but now I don't have it anymore and I've paid for it all the time. You don't think there's an opportunity cost on that money that you put in as premiums that continue to grow every year until you die? So your costs are not just your premiums. They're the cost of money that you could have used somewhere else because you didn't die. Whereas whole life insurance has no opportunity cost because it's going to pay when you die and you're going to use it while you're alive. So you've used it. You've used it to buy property. And at the end of the day, you could take income from it. You can take other assets that you have and take more income from it because you've got this policy as a buffer on the side. There's lots of things that you can do with money. The key is to understand how to create and how to generate income. And all these great ideas can all come from this great person that you just met today from this radio show.
Premier Southwest Planning Group, LLC is a registered investment advisor. The content of this advertisement is intended for informational purposes only and is not intended to be investment advice. The views expressed in this program are subject to change based on market and other conditions.